Good evening and welcome to another episode of Business Today, a program on ChannelEye Rupavahini where we discuss on the current matters that take place in the business world. Local, global, wherever it happens, we discuss here on ChannelEye on business. As you know, on Business Today, we always bring out the best in you in business personalities. So let's go and check out who our business personality today, who has many fields to talk about.
Thushan Wickramasinghe, Chairman CEO at Capital Trust Holdings Limited, has been credited with arranging many of the strategic transactions in the Colombo Stock Exchange and developing one of Sri Lanka's leading stockbroking firms with the largest local client base served through 6 branches. With Thushan's visionary guidance on Capital Trust Residencies Private Limited, though a new entrant to the sector of property development, has won many awards at the Asia Property Site. He has been instrumental in steering Capital Trust Properties Private Limited, becoming a fully fledged real estate solution provider with its own portfolio of properties. Thushan, as the founder director, had the foresight in 1996 to establish Shakti Institute of Education Private Limited, the leader in English medium education in ordinary level and advanced level examinations. He is the chairman of ALFT Packaging Company Private Limited, one of the largest flexible packaging companies in Sri Lanka. Thushan received the Asia's Greatest Leader 2018 award at Asia's Greatest Brands and Leaders 2018 award ceremony in Singapore 2019.
Yes, as you saw, Mr. Thushan Wickramasinghe, Chairman CEO, Capital Trust Holdings Limited. Very good evening.
Very good evening.
Yeah. So let's start off things. Obviously, we know Capital Trust Holdings has been there for a long time. They have over 35 subsidiaries, including finance solutions, to real estate, to education, to information technology. Where did it all start and where did you start from?
Well, all this started in 2003 when a leading business family and myself bought a small stockbroking firm. Very soon we were the leading stockbroking firm, and then 2007-2008 period we did a large number of strategic transactions. Then 2010-2011 period, when the stock exchange was recording the largest ever turnover at that time, we were the #1 stockbroking firm in terms of brokerage turnover. Then knowing that stock markets are always not up and moving up, we decided to diversify, and we incorporated Capital Trust Holdings Limited in 2010, and then we went into margin trading to Capital Trust Credit Private Limited, fund management through Capital Trust Wealth Management Private Limited. Then in 2013 we incorporated Capital Trust Properties group of companies, where my wife is the head of the cluster, and we continued to invest in properties, and we were one of the best property broking companies at that time. Then in 2015-16 period, we realized that the stock market in dollar terms is going to drastically come down in the next 5 years, and we incorporated the Capital Trust Residencies group of companies. We started and completed 3 apartment complexes. And we also in 2018 took a strategic decision, although we had bought 5 further lands to do apartment complexes and got approvals. We decided not to go with that, and that was a correct decision. Then once again, middle of 2020, we decided to spend most of our time in the stock market, and today we are correctly advising clients and taken the market to the all-time high levels.
Well, I think that's a very big journey coming forward. Something that everybody talks about, like say when it comes to a lot of businesses, is the problem that occurred to survive through the COVID pandemic, 2019, 2020, and going into 2021. So how did your businesses survive the COVID-19 pandemic?
Actually, when China itself was having COVID, we bought all employees brand new laptops, gave them these internet routers, and made them ready to work from home. And we also created a culture where we have one big virtual breakout room set, so that each company, each division works as if they are in their respective rooms. They can see each other, they can come and meet me, make presentations, discuss me privately in another virtual room, and actually things are better than physical office situation, because most of the employees are saving 4 to 5 hours getting ready and coming to office, and they are much more energetic now, very much fresh and happy, and we have a dynamic workforce. Then when talking about how the stock market worked, actually we made representations to the Securities Exchange Commission, SEC, and told that in a lockdown period only local and foreign institutional custodian accounts can buy and sell shares and make settlements effectively, but more than 90% the Sri Lankan individuals and companies, they can't make settlements because we don't have bank details, we don't have email and mobile number details of every single client. So thereafter the SEC swiftly appointed a digitalization committee, and that committee very efficiently brought in new rules stating that every single investor has to give an email address to receive the contract notes by email. The CDS can send the monthly statements by email. Then by compulsory having to give a mobile number, the CDS can send their transactions by SMS. Then also they brought in a culture where bank account details are given to a stockbroking firm, so the stockbroking firm can give their sales proceeds by electronic transfer. So things became very efficient. Then further, this digitalization committee created a CSE app. Through this CSE app, investors can pay without any paper, within 10 minutes open an account wherever in the world, whether in Sri Lanka or in any country. And they have further developed another menu called eConnect, where they can update their investor information. So things are very efficient, and I think COVID was a blessing to the stock market. What would have never happened in our Sri Lankan market happened, and I'm very happy about it.
Well, I think that's very interesting, because everybody was talking that the pandemic is affected, but then according to you, I think the stock market has gained a lot of things with the pandemic.
Yes.
And gone into a different thinking matter. Well, Capital Trust has become a very popular stock broking firm. You are a respected CEO among the investors in the Colombo Stock Exchange. So let's focus more on that. Or the stock market is performing well these days, as you mentioned earlier. So new investors have come in. Well, what is the reason for this?
Okay, let me go back to 13th of May 2020. It was a terrible day where we saw the market had drastically come down. I think it was about 12% in one day. Basically, it was like floodgates opened for the foreigners to sell, and the local investors could not take the brunt of it. So actually, the first issue was we had to handle this foreign institutional sales. I just need to explain to everyone that, you know, I also fully agree that we need foreign portfolio investments to the country. Full respect is given to the foreigners in that respect. However, if you look at the statistics from May 2020 to date, there has been a net foreign outflow of 83 billion rupees. If you look in another way, okay, what is the benefit we got from these foreign portfolio investors, institutions? When you look from January 2010 to date, also there has been a net foreign outflow of 83 billion. Then to add to that misery, we have a Employees Provident Fund EPF, which is not investing when the market P ratio and the respective companies become very cheap for whatever the reasons. So it's only the local individuals and the individuals companies which have to take this market and absorb all the foreign selling. So it's very easy for these gloom and doom predictors to give a long list of things which is going wrong with the country, with the politicians, with the stock market, but we have to think very rationally. In these circumstances, what can we do? We can't just get drowned, we have to come up. So what our firm did was, we just thought, okay, as a result of COVID, what has happened? We have a government who has taken a bold decision to reduce interest rates. Basically, May 2019, the fixed deposit weighted average fixed deposit rate was 11.2%, and the fixed deposit rates had come down to around 5.6%. The 12-month treasury bill rates from 11.8 in November 2018 had come down to around 5%. Therefore, we should be able to get a portion of the daily maturity proceeds of fixed deposits. There is officially about 7,000 billion fixed deposits in the country, and daily there is a certain amount which is maturing. Therefore, we wanted to attract that, and that was getting attracted. Then further, what you could be sure in a COVID situation where 3 years we are not going to have tourism is that there is going to be a dollar shortage, and there is going to be a continuous LKR depreciation. Therefore, in the stock market, we made that, we have to accept that, we made that our base for recommending certain shares which have more dollar income and dollarized assets, and those shares nicely went up. Then we also recommended, because of the dollar shortage, import bans were imposed on the tile sector and the cable sector. So we recommend the stocks in the tile sector and the cable sector. Those also every quarter showed better and better profits, and our recommendations, which are around 10 stocks only, have every quarter shown better and better profits, and it's a sustainable, fundamentally driven rally.
So going on now, currently the ASI index is around 10,666. Do you think that this will go up, or will it have a crash as the future goes on, especially in the year 2022?
Well, we advise everyone not to look at the market as a whole, because the market is 289 stocks. None of us are going to buy 289 stocks, so what do we care about where the market is going or where the all share index is going? Just select one set of shares which are fundamentally sound and follow them on a daily basis, and see whether your portfolio is up or down on a daily basis, monthly basis, and maybe a 6 months basis. Don't worry where the index is. So actually you get misled if you look at the index every 5 minutes, because some share is just moving this way, that way, and you're basing your investment decision on fundamentally good shares also because of the all share index going here and there. Then answering your question, will we see a crash? Well, if a particular share has gone way above the market P ratio of 12.9, we will say a share is not below 12.9 market P ratio, but it is say over 100, or we take the price to book value of the market is 1.5 times, but a share is more than 5 times or more than 10 times. Such shares, which may be just 2-3 shares, may crash. That is a separate matter. But far the market is concerned, we have a very fundamentally driven solid market. And also, if you want to, markets just do not go on sentiment and perception. You can compare our market with the regional markets and the global markets, and our market is cheap. If you take our market with the 2010-11 P ratio and price to book value also, it is very much cheap. Then if you look at the low interest rate regime which is going on, that is like the backbone, and we also have come to like the end of foreign selling. So, therefore, there is more stability, because end of the day our market today is 94% local institutional I would say local companies and local individuals turnover, and such people do not have alternative liquid assets to invest in. So, it is very stable. They have no place to go. They may sell one share and again go into another share, because they have no other alternative to go. So, the market is very stable, and we need to take the market gradually in a sustained way.
Well, a lot of people say that the stock market or the index is going up because of a few shares, especially that is happening. So, what would the because of the especially where the public is looking at of the shares going low, this is not a good thing if this happens, if it's especially maintained by a few people. But then, do you think that there should be a change in the index calculation?
Yes, I agree that there is about 2 or 3 stocks which have a free float of less than 1%, and some people have cornered these shares, and when they have high market caps, the index gets highly sensitive to that. Actually, the Colombo Stock Exchange correctly is having discussions with the SEC and the stockbrokers, and they are seeing whether it is suitable to bring free float market cap way of calculating the index. This is done in the National Stock Exchange and the Hong Kong Stock Exchange, and I think this will be brought soon, and this problem will be solved. And what would happen is then the index will still start from the example 10,666, but it will go slowly when a illiquid high market cap company moves.
And another thing is the bank interest rates. The bank interest rates are going up, and it might go up more and more in the future. Will the investors have investors leave the market because of this, or will there be an effect to the market with the bank interest going up?
Yeah, actually, it's like this. When we saw a new governor came, we saw the interest rates moved up a little bit, but then the gloom and doom predictors came and said interest rates are going up, and the market will come down. That is all wrong, because if you look at the last 2 weeks treasury bill auctions, the short term treasury bills and bonds have come down. In fact, the last auction, the 3-month treasury bill came down by 20 basis points, giving a signal that the interest rates are not going to significantly rise. Most probably, like what Capital Trust Research predicts, is that the interest rates will be around these levels. Then if you are talking of whether interest rates are going to influence the market, that is completely wrong, because what matters is it's not the treasury bill crowd who comes into the stock market, it is the fixed deposit people. So if you take the 12-month weighted average interest rate of fixed deposits, it has been around 5.6 to 5.7% in the last 1 year, right? The banks have not increased the interest rates. So therefore, there is not going to be money coming from the stock market to bank fixed deposit, simply because you get another 2% or 3% even. That's nothing, because in the stock market, if you properly select the fundamentally sound shares which will benefit from the present macroeconomic situation, those shares have risen 200%, 300%. So here you get in fixed deposits another 3%, it's nothing. So it's a complete myth that even if interest rates go up another 2%, there will be money shifting. It's not going to happen. And in any case, what we say is that the interest rates are going to be at present levels or slightly lower.
With the recent port city coming up, and obviously we are seeing the share companies associated with the port city gaining a lot of gains, how will this happen in future?
Yeah, when talking about the port city project, I think firstly people must understand that our Sri Lankan government did not spend a cent on investing in this port city project. So it has been the China Harbour Engineering Corporation which invested in this project, and they in turn have created several projects, and Browns Investments Limited have, because you are asking only, I am telling the name. So they have invested in Colombo International Financial Center stage 1 and stage 2, and knowing the dynamic directors it has, I won't be surprised if they do a minimum of 2 further projects there. And what really happens is that you get a Chinese government owned company partnering Browns Investments, and the way I see, Browns Investments has the controlling interest of this special purpose vehicle, which is going to do CIFC 1 and CIFC 2. So that's a great thing for a Sri Lankan listed company to get into a venture like this. And the other thing is that what matters is that these projects attract US dollars to our country, as well as it gives a multiplier effect of economic activity into our country, and this is a start. If they didn't do it, then there will be a delayed start. Then further in our research, we do not give any forecasts or any figures in regarding the port city project. So what happens in the port city project is a bonus, and also I believe that the stake which Browns Investments has in the port city project can be sold in dollars.
Well, looking at Sri Lanka's stock market and other market in the other countries, what do we need to develop, or are we in par with the other countries?
Well, actually due to COVID, there was a escalation, a quick start of various things which should have been digitalized over the last 15 years. So we are happy that the CSE app, which has all the stock market information, you can open a stock market account within 10 minutes without any paper. Then you have eConnect, where you can update your information. You have broker research. Then now even yesterday the budget information was there in the CSE app. So that's a very good thing. So then further, the stock exchange has brought very much a e-culture in doing many documentation, audits, everything without paper, which I really welcome. Then if you ask what else should we do, what we have been talking for the last 10 years with the dynamic SCC was completed a few months ago, that is the delivery versus payment, DVP, which encourages foreigners to invest because they feel safer. Then the next step is central counterparty system, CCP. Then you also have to bring short selling, because the fault in our market is when we have a certain wrong economic policies and the market is continuously coming down, then broking firms have nothing to do because the market is only coming down. You can't do any turnover. So in such instances, you need short selling so that broking firms can, not only broking firms, the clients also can sell and also make money, sell and buy back and make money. Then further, there is new products which are being introduced, like REITs, real estate investment trusts, then short selling and stock borrowing and lending, then securitization, then dollar board. So those are the new products which are coming, and I think the stock exchange and the SEC have now identified the proper things. What needs to be done is get the proper consultants and teams and quickly finish up all this before majority of the CEOs start retiring. And then the other thing what I want to say is that the biggest problem at the moment we have is we have 3 online trading providers. So once in a way the systems come down, people blame the stockbroking firms, but actually what has happened is in 2015 there was a RFP and then these 3 vendors met those requirements, but after 5 years the stock exchange has exploded and grown so many times that these systems can't bear that sort of volume. And then, so you can't blame the system providers or the stockbroking firms. This is the circumstances. So now what we have to do is the regulators have to get together and quickly go for an international tender and get suitable systems which can sustain very much larger volume in the next 5 years. In other words, what I am saying is with the CSE app, large number of accounts are being opened, but however on the other side, how are these orders going to get executed has not been still thought of and action being taken. So I hope the necessary people quickly take action regarding this.
I think that's something good that we are hearing. So hopefully the necessary authorities will take the necessary action to keep afloat the Sri Lankan stock market as well, with the in par with what happens around the world. Thank you very much, Mr. Thushan Wickramasinghe, for joining us on our Business Today program. So if you have any myths about the stock market and what's happening, well, that has today been cleared by Mr. Thushan. Thank you very much. With that, we come to the end of another episode of Business Today. Meet you again next week on Business Today.